The markets may be closed, but the business stories are just heating up. I'm Bea Santiago, sitting in for Robert Tan. Catch up with us on Business Brief. Here are the afternoon's top business stories. December inflation climbs to 1.8%, but 2025 closes with a calmer 1.7%. Price is steady as we enter 2026. Bangko Sentral signals inflation is under control and drops a hint a February rate cut could be coming. Asian stocks soar to fresh highs led by Japan, Taiwan, and South Korea, with investors watching U.S. jobs data closely. Markets kick off 2026 on edge geopolitical tensions, U.S. midterms, AI tech, and central bank moves all in play. Inflation moves higher in December, but the bigger story is what it does not do. December inflation rises to 1.8%, even as 2025 year-on-year inflation stays below 2024 levels. According to data from Philippine Statistics Authority, the figures show a late-year pickup that still fails to reverse the broader cooling trend. That contrast highlights easing price pressures despite a December increase. Paulo Barcelon breaks down the numbers in the Business Brief report.
Consumer spending during the holiday season contributed to rising inflation in December, but it is still food that is driving up the numbers. Rice, eggplants, fish, onions, and pork are among the biggest contributors to December inflation, totaling a 31% contribution to the uptick in prices. National statistician Claire Dennis Mapa says consumer spending during the holidays and the impact of weather in areas outside of Metro Manila, such as the Bicol region and Visayas, affected December's numbers.
Ang nag-push talaga ay yung ating mga pagkain, no? Vegetables, tumaas siya, yung ating flour products, tumaas din. So ito yung ginagamit natin sa consumption noong December, part of the holiday effect, no? So we hope that this is seasonal, temporary, and babalik naman yung presyo sa January.
Mapa adds, despite rice prices overall going down, the cost of some vegetables have gone up, including onions, which saw a 79% price increase in December 2025. The PSA adds, year-on-year, fish and meat products have higher prices last year compared to 2024. Rice prices have also gone down in 2025, primarily due to implementation of importation bans and lower tariffs. Meanwhile, average inflation for 2025 is down to 1.7% from over 3% in 2024. In a statement, Economic Planning Secretary Arsenio Balisacan says the administration is eyeing policies to keep inflation well within the 2.4% target range for 2026 to 2028. Among them are bigger spending on agriculture, food security, and energy. The Bangko Sentral says inflation expectations are well anchored, and they are projecting 2026 to 2027 inflation to settle within the 3% target. RCBC Chief Economist Michael Ricafort says inflation could remain at slightly below 2% in February and at least 2 to 3% in March, while also eyeing a 3.2% overall target for 2026, allowing possible policy rate cuts by the Bangko Sentral. The BSP says the end of the easing cycle is near and future cuts will be guided by incoming data. Paulo Barcelon, Bilyonaryo News Channel.
To help us understand the numbers, the government's response, and what this means moving forward to 2026, we're exclusively joined by Dr. Luis Dumlao, economics professor from Ateneo de Manila University. Good afternoon, Dr. Luis, and welcome to Business Brief.
Thanks for having me. Good afternoon.
Dr. Luis, inflation in December was 1.8%, mainly because vegetables prices went up after Typhoon Uwan. What does this say about how vulnerable our economy is and climate-related disasters, and how can we better protect our food supply in the future?
Actually, it's right now it's not 1.8 is still below the government target of between 2 to 4%. So in that sense, there is still need to have a higher inflation just to stay away from from the fear of deflation. Deflation meaning a negative inflation. So there is plenty of room for the economy there's room for to grow, and therefore the inflation that's 1.7, 1.8%, we still have room to raise it a bit higher.
For the whole year, inflation averaged 1.7%, which is
Yes.
below the government's target. Is this a sign that people are spending less, or does it mean government policies are really working well?
It's a combination of both. On the demand side, it's across the board, consumption, investment, everything. They are less than what uh, they they can potentially grow. So consumption is not growing as fast as used to. And then you have on the monetary policy, it has been what 1.5 months of easing policy rates. Now it's down to 4.5%. So the policy rate has been going down since August, I think last year, and then up to December of this, as late as December 10 this month, last month, to
Yes.
4.5%. And that would ease inflation, supposedly.
Some food prices like onions and eggplants went up while rice and
Mhm,
chicken became cheaper. How
mhm.
should the government handle these price differences so both consumers and farmers are protected well?
It's not really the government per se, but I think it's has to be the household making the adjustments. We keep in mind, yes, vegetables has an inflation of 12%, but rice has a deflation of 12%. So it went down by 12%. And luckily, in that sense, as far as how our government weighs each of these commodities, rice is 9% of the CPI and vegetables are only 3%, indicating that rice has a heavier burden or heavier effect on our typical household. And that means if you balance it out, then uh, then there's more room to consume rice rather than vegetable. It could be good or bad, but it is a balancing act on the household level.
Experts say good coordination between the government and central bank helped control inflation. Which actions made the biggest difference, and what lessons can we use during future crises?
It's been 1.5 years of easing policy rates. That's the one that's helped the most. And then in terms of this month, we expect that rice is even to ease up. The price of rice will even ease it up even more, considering that the government is lifting the ban of importation of rice.
With big investments now going into agriculture, as you mentioned, and energy, when can ordinary consumers and businesses expect prices to become more stable?
The rice will be more stable because of the importation. Uh, and then it's going to be very very slow. So it was even double digit, over 20% deflation the past few months. Now it's down to deflation, still deflation of 14%. Uh, in terms of energy, the investment in energy is something that is in the long run, and we would feel them quite slowly the next even years. But the good thing as far as external factors are concerned, as far as the uh, well, you said energy, but let's speak of fossil fuel like oil. Even oil, uh, that is on the downside. January from $76 per barrel to $62 per barrel. So in that sense, that's also a downward pressure on the price of transport.
Okay. There are global risks ahead, such as the changes in oil prices and
Uh-huh.
geopolitical tensions like the US actions in
Yes.
Venezuela. How could this affect inflation in the Philippines, and how prepared is the government to respond?
Okay, the case of Venezuela, it's opening up of oil in its reserve to the rest of the world, so that in the long run, uh, uh, that would ease up inflation as far as transport is concerned. But that would be in the long run, so that's good. But anything that's bad that happens geopolitically, historically, we have been a passive. We have been passive victims of such, and usually we cannot do anything much about them, unfortunately.
Inflation affects how much families can afford to buy. How are government programs actually helping ease the burden for ordinary Filipino households?
As far as the government is concerned, it's doing enough to ease inflation. We have to keep, yes, 1.8,
Yes.
1.7, that's December, 1.7% is still inflation. We feel it. Uh, but if we look at the historical perspective, these inflations, well, if we put it in perspective in terms of the target, they're still below the 2 to 4% inflation target. As far as history is concerned, it's nothing compared to what we experienced in the 1980s of over 20% inflation, 1990s of 15% inflation, 2020s of about 10% inflation. We've come a long way,
Yes.
historically speaking.
To keep the inflation low, Doctor, in the
Yes.
long run, which areas need the most improvement? Transportation or logistics, market regulation, or farm productivity?
It's one is the uh, sorry to be insensitive to our rice producers, but it is what it is. We have to. The good news is we will allow importation of rice once more. Uh, it's the second one is the government should be focusing on competition rather than protecting or selecting certain industries. And these are long run solutions, and these are not these are something that you will not feel in the short run. It's quite it's a discipline that needs persistence, that it will take long before people actually realize it. Keep in mind also, historically, to keep us in perspective, our inflation of over 20% in the 1980s took us more than 30 years to get it down to around 2 to 4%.
Dr. Luis, looking ahead to 2026, what is your outlook for the Philippine economy in terms of growth, inflation, and investments? Which sectors are expected to perform well and which may struggle?
Okay, in terms of inflation, inflation this January, we expect it to pick up by about 1.9%. And then for the year 2026, it will average out to 1.4%.
1.4.
That's the base case scenario. Given the fact that the central bank has signaled that it will ease its policy rates even more, it could be a bit higher than that. The same way that what we felt we expected to be 1.4, it turned out to be 1.8 because of the continuous easing of policy rates. In terms of the growth, what should I say? The bad news is there's not one industry that's going to be the major driver. The good news is there's not one industry that's going to be a real drag in the economy. The bad news is it's across the board. Agri, service, industry, subsectors, here and there will be below 0.2%, 0.5%, 0.3% below their potential. So you're seeing a general slowdown, albeit it would still be the fastest growing or one of the fastest growing economies in Asia, in East Asia specifically.
Dr. Luis, how are businesses and households adjusting their spending and investments because of the inflation? And what is being done to keep confidence in the economy strong?
Well, one number I'm seeing is across the board, it's slowed down, still faster than, and then inventories are starting to slow down. So the expectation basically is the economy, albeit one of the fastest growing in East Asia, it will not perform to its potential, and that's why the what's coming, with the inventories that's slowing down, that signals the perception of the of market players across the board.
Finally, Dr. Luis, let's go back to the recent U.S. strike on Venezuela. It's expected to have limited direct impact on the Philippines, but there are still risks. How could global conflicts like this affect our prices, trade, or investments, and what steps are in place to reduce any negative impact?
Okay. The impact should be minimum, and in the long run, the price of oil, it would lower the price of oil. That's positive on our side. But on the negative side, if it turns out to be negative, historically, we had been nothing but passive victims of things that happens globally. What can be done by government? It's stay the course, no matter what happens. Keep inflation benign between 2 to 4%, and then keep the competition. The business of government is not business. The business of government is to keep the market competitive. And in the long run, that one is the one that will take care of us.
Thank you very much, Dr. Luis Dumlao, economics professor at Ateneo de Manila University. Just as inflation edges higher, the Bangko Sentral ng Pilipinas says policy may still have room to ease as the economy slows. The BSP says the inflation outlook remains benign, even before after December inflation rising to 1.8% from 1.5% in November. The increase comes after faster price gains in food, non-alcoholic beverages, and clothing. Looking ahead to 2026, the central bank expects inflation to move higher but stay within its 2% to 4% target band. At the same time, the Monetary Board says domestic growth is weakening with business sentiment hurt by governance issues and global trade uncertainty. The BSP says domestic demand should gradually recover as rate cuts and higher government spending work through the economy. Governor Eli Remaluna confirms a February rate cut is on the table, though unlikely as easing cycle nears its end. Any further rate cut could lower borrowing costs, but the BSP says future moves will depend on incoming data and global trade risks. And we're taking a quick break. Stick around, we'll have more stories ahead. You're watching Business Brief. Even after a major budget veto, financial executives warn a large fiscal risk still remains. The Financial Executive Institute of the Philippines welcomes President Ferdinand Marcos Jr.'s veto of 92.5 billion pesos in unprogrammed appropriations. However, Finex says 150.9 billion pesos in unprogrammed funds is still included in the 2026 national budget. Finex warns these funds could weaken fiscal discipline and public trust if they lack clear triggers, strict safeguards, and full transparency. The group says strong governance, accountability, and targeted spending on education, health, and infrastructure will determine whether the budget delivers real economic impact. Jollibee is hitting the reset button, keeping its cash-rich Philippine business safe while spinning off its heavy-burden global expansion. Bilyonaryo Tony Tan Caktiong's Jollibee Foods Corporation plans to separate its international operation and list him as a standalone company on a U.S. securities exchange. The domestic Philippine business will remain on the local bourse, preserving its steadier cash-generating operations. The move comes after Jollibee's fast-growing but capital-intensive overseas portfolio continued to pressure the earnings of its core domestic business. Jollibee's restructuring shows a wider trend, separating cash generators from high-growth bets to protect balance sheets and unlock value in volatile markets. Asian markets keep climbing. Wall Street's record gains in energy and financials are providing the momentum. MSCI's Asia Pacific Index hits all-time high. Japan's Topix rises 1.6%, Taiwan's TAIEX gains 1%, and South Korea's KOSPI advanced 0.7%. Hong Kong's Hang Seng jumps 1.8%, while Chinese blue chips leap 1.2%. Wall Street sets the tone with the Dow Jones hitting a record led by oil companies and banks. Crude oil eases back slightly after the Venezuela event, while the US dollar slips ahead of January jobs data. Precious metals stay near record levels, and copper hits an all-time high, signaling strong demand and risk-on sentiment. The rally highlights opportunities in exports and commodities, but companies are watching currency fluctuations and oil volatility as key risks. We're taking another short break. Up next, taking a quick look at the market today and more when Business Brief returns. Stay with us. Global markets face multiple risks in 2026, from U.S. midterm elections to geopolitical tensions, diverging monetary policies, and AI-driven tech bubble. Swiss Coat Bank senior analyst IPEC Oscar Deskaya says stocks may rally, but gains are expected to lag to 2025. She adds the dollar could weaken while bond yields remain elevated across the U.S., Europe, and Japan. Analysts say central bank decision, macro shocks, and political events will drive markets this year. AI and crypto markets are expected to add volatility to the global financial flows. Asian markets kick off 2026 on a mixed note, with gains across North Asia and Indonesia, while Southeast Asian stocks face modest pressure. Japan leads the advance. The Nikkei 225 climbs 1.32%, closing at 52,518 in Hong Kong. The Hang Seng Index jumps 1.62% to 26,773. As investors return to Chinese equities, mainland markets follow suit, with the Shanghai Composite up 1.42% at 4080. Indonesia also posts solid gains, the Jakarta Composite rising 1.27% to 8859. Not all markets join the rally. Thailand's SET index slips 0.22% to 1277, while Vietnam sees steeper losses, with the HNX 30 down 1.48% at 530. In currency markets, the US dollar trades at 156.38 yen, 7.79 Hong Kong dollars, and 1.28 Singapore dollars. The greenback also stands at 0.67 Australian dollars, 14.45 South Korean won, and 31.17 Thai baht. Turning to commodities and crypto, gold holds near record territory, rising $44.75 per ounce. Cryptocurrencies ease slightly. Bitcoin dips 0.55% to $96,657, while Ethereum slides 0.15% to $33.32. A sea of green dominates the Philippine equity market on the second trading day of the week. The PSEI closes over 2% higher at 6317. All sectoral indices end higher, with services rising the most, more than 4%. Advancers outpace decliners, 141 to 72, with value turnover at 8.3 billion pesos. All of the day's most active stocks close higher, with Jollibee Foods rising the most at almost 15%. On currency, the peso is currently trading at 59.14 against the US dollar, down from the previous close of 59.13. The Dow surges to a record high even as Venezuela faces political chaos. Energy giants Chevron, Halliburton, ConocoPhillips, and ExxonMobil lead the charge after the U.S. captures President Nicolas Maduro, sparking optimism across global oil markets. Investors cheer gains in both tech and energy, pushing the Dow past 48,900 points for the first time. Markets close watch as how Venezuela's turmoil could influence global oil supplies. Analyst Art Hogan notes that fresh economic data and renewed investor confidence are fueling the rally, setting a strong tone for 2026 trading. And that's a wrap for today's business brief. I'm Bea Santiago, sitting in for Robert Tan. Join us again tomorrow for the stories that help you plan your next big, bold business moves, only here on BNC, the Bilyonaryo News Channel.